If you're considering selling any investments prior to the 30th of June, such as shares, crypto, or investment properties, you need to understand these 4 vital factors. The first is understanding is what will the capital gain or capital loss be on that particular investment. So this is one of the most vital things you need to understand is, are you in a gain position or are you in a loss position? To be able to know this, you need to understand how do we actually calculate a capital gain. So at a basic level, the capital gain is going to be the sale price less the acquisition or the cost base. So we need to understand what goes into these figures to be able to do our calculation. So our sale price is going to be whatever we sell our asset for less any fees. So we're really looking at what our net return on the sale is. And then we're going to look at our cost base. So this is going to be the cost we paid for the asset plus any fees at the time of purchase. So what was the total amount we actually paid for this asset? So let's take some shares and we go and sell some shares for $1,500, but they've got a $10 brokerage fee attached. So we know we've actually sold them for $1,490. So now we need to work out what was our cost base. So our cost base, well, we initially paid $1,000 for these, and there was also a $10 brokerage fee at the time of purchase. So our cost base is $1,010. This means to work out our capital gain, we're simply going to take the $1,490 less the $1,010, and we've got a capital gain of $480. Now there is software out there that can assist you with this, or you can use something like an Excel spreadsheet, but it's all about knowing the cost base of your assets. For instance, if you're investing in something like shares, you can use something like ShareSite, where you can have all of your stocks in there that you own, and they will show you the cost base, and you can actually pay for the higher levels where you can run unrealized gains reports, so you can find out where you actually sit for your current investments. For crypto, you can look at something like Crypto Tax Calculator, which I've done a full video talking about. But in here, you can again see the cost base of your current holdings and therefore do some calculations with their tax loss harvesting tool to find out what are the tax implications of selling some of these. And if you're running with an investment property, you're probably going to do some of this in Excel because you're going to need to look at your conveyancing report on purchase and do some estimates on your sale. But it's all about understanding your current position on these assets you're considering selling prior to the end of financial year. Now, it's not just about these current assets though. We need to look at what we've actually done throughout the financial year prior to now. And this is because to work out the tax implications of a sale, we're going to need some other details around existing sales that are in place. Now, one of the key things to this is determining the date that the sale actually has taken place. So for shares and crypto, it's pretty straightforward because it's going to be on the date of sale. Now, for something like property, it's going to go on the date of contract. And this is something people get caught out. They often think it's the settlement date, but it actually goes on the contract date. So what you need to do is look at from the 1st of July until current, what are all your sales of capital gains assets? Now, it doesn't matter which asset class they fit into because they're all going to roll into the same figures at the end of the day. And the key things you want to split them into is what are my gains that have been held for over 12 months? What are my gains that have been held for less than 12 months? And what are my capital losses? So if you're using any of those softwares we mentioned previously, it's great because you're able to track these throughout the years and know what your current position are for these 3 important figures. Now, one of the things that we're then going to be able to consider is, does the capital gains discount apply? At a basic level, the capital gains discount applies when you held an asset for more than 12 months. If it's held for less than 12 months, no discount. Held for over that, you get the 50% discount. The key thing is though, understanding the process that it works on how you actually apply the discount. And this is because it goes off total gains less losses, then you apply the discount. Where a lot of people go wrong is they think that they discount all the gains individually and then they take their losses off. And this is the wrong way to do it. So to show you the correct way to do it, let's look at an example. And let's look at someone that has $10,000 worth of gains throughout the year. And they've all been held for over 12 months. They then have $2,000 of losses. So what they need to do is take the $10,000 that they've made in total gains, take off the losses of $2,000, and that'll leave them with $8,000. They can then apply the 50% discount from there, and they're left with $4,000 of taxable gains. Where a lot of people go wrong is they take the $10,000, they split that in 2 and have $5,000, then they take their losses off and they get to a figure of $3,000. This is wrong because you haven't applied them in the correct order. Now, before I talk about the tax implications of selling any of your investments, I would love for you to hit that subscribe button. I'm almost at 4,000 subscribers, but I've got the goal to get to 10,000 by the end of this year. And I'm going to be providing lots of valuable content, especially as we're hitting tax time, that's going to help you maximize your return. Now let's get back into the video. So now we've done all this prep work, we can now start to look at what are the tax implications of selling any of these investments prior to 30th of June. So at a basic level, the calculation to work out any tax owing on any gains is going to be your gain times by your marginal tax rate. Now, of course, therefore, we need to know what the taxable gain is going to be. And obviously, when we're looking at our overall picture, we want to know what is the tax impact of selling that particular investment. So again, let's bring back to our example. And in this example, we've gone and sold that $480 gain that we worked out previously, and that has been held for over 12 months. So our new position in total gains is now $10,480. Now we still have those $2,000 of losses, so we're going to apply them. And then we're going to take 50% of this, which is going to leave us with a total taxable gains of $4,240. But we want to know what was the tax implications of that new sale. So compared to our initial situation, after selling this, we've now got another $240 of additional taxable income. If we assume an average tax rate of 34.5 cents, this is going to be $82.80 of tax on our sale proceeds of $1,490. So nowhere near the full amount is going to be taxed, but we need to understand all of those prior steps to be able to work out what the actual tax impact of that sale is. So it's really important to understand that anything you sell prior to 30th of June is going to be recognized in this financial year. And you really need to have an understanding of what else has happened throughout the year to make sure that you're optimizing your tax position. Especially if you've got positions that are in large loss positions and you've already made a lot of gains, you don't want to understand what is the actual tax implication of selling some of those positions that are in a loss. Now, if you're wanting to know more about how you can help maximize your return before the end of the financial year, I've done a bit of a checklist video here where I go through some of the key things that you need to consider prior to 30th of June. I hope to see you over there.